Greetings, members, one and all of the Salivation Nation. We had some pretty good economic news today, but you wouldn't know it if you looked at the gold and silver prices or what Jerome Powell said from the Federal Reserve. Let's explore. Yes, that's right. Gold prices settled a little bit higher as the Fed Chair Powell says uncertainty surrounds economic recovery, which sort of flies in the face from what the data are showing us. But we'll read on here. Risk asset score of Philip from retail sales report and coronavirus drug capping gains for gold here on this article from Market Watch. Gold futures settled higher Tuesday, finding support after Federal Reserve Chairman Jerome Powell said that despite some upbeat U.S. economic data, uncertainty continues to surround the timing of recovery. And so going back to that, the Dow has ended 527 points higher, and the stock market notches its third straight gain amid hope of coronavirus treatment. U.S. stock market closed out Tuesday, trade sharply higher after investors parsed testimony from Federal Reserve Chairman Powell on the economy, reacted to a report of a prospective treatment for COVID-19 and to a report on retail sales that suggested that worst of the damage wrought by coronavirus lockdowns may be over. So retail sales rose 17.7% in May, according to data from the Commerce Department, marking a sharp rebound from a record slump in March and April during the depths of the pandemic. And I'll go back to that the jobs numbers report that was sort of somewhat misleading, whether on purpose or not, we're not sure, but nonetheless, it still does mean that the jobs numbers are starting to move in the other direction as more jobs are created. We'll see what the next round says, but as we start phase 2 openings in some states around the country, even with a slight resurgence in the pandemic, there is some hope out there. And this retail spending, I think, backs that up. Now, do we trust these numbers? I don't know. But I think by and large, there is a little bit of hope out there. And I think the drive to get back to normal, I think is sort of what is leading this. This is the first massive economic downturn that we've seen that nobody wants. Nobody is, there's not really been any kind of triggering mechanism other than this unnatural event, this pandemic. And I think that's kind of what Jerome Powell was saying, is that people aren't completely comfortable yet. But by and large, we're seeing more and more people being comfortable with the situation with opening up than probably what was thought. So in testimony prepared for the Senate Banking Committee Tuesday, Powell acknowledged that some economic indicators have pointed to a stabilization in activity and others have suggested a modest rebound, but significant uncertainty remains about the timing and strength of the recovery. He said the Fed was committed to using its full range of tools to assure the recovery from the recession will be as robust as possible. So there you have it. And that is where our hopes are kind of dashed, because when the Fed gets involved with its full range of tools, that is at the detriment to the long-term view of things, which is why gold and silver are a strength in these times. And for the first time ever, the Fed is buying all the debt, and that's not good. But anyways, U.S. retail sales data for May showed the sales activity jumped 17.7%. The government said Tuesday economists polled by MarketWatch had forecast an 8.5% increase. The report indicates that U.S. retailers began to recover as the economy started to reopen, following record sales declines in the prior 2 months, triggered by the coronavirus pandemic shutdowns. Data on industrial production, also released Tuesday, revealed a rise of 1.4% in May. Now, will there be some factors that they don't take into account? Can we trust these numbers? I don't know. I'm reporting them as Market Watch is. We'll see. I'm cautiously optimistic, though. Meanwhile, a report that North Korea blew up an inter-Korean liaison office at the western border town of Kaesong suggested rising tensions in the region between South and North Korea. That provided support for Haven Gold, particularly given that the metal has posted declines in each of the last two trading sessions. And that's another thing, too. These geopolitical events have not gone away through the coronavirus pandemic, and we still have tensions with China, with the U.S. as well, as we try to navigate phase 2 of the trade deal. And that's something else to consider as well that could have an effect on precious metals. In a daily note, analysts at Xander Metals suggested the possibility that the market saw some flight to quality buyers move into gold and silver following reports that North Korea had bombed a South Korean installation. But actually, that's not what happened. It was on their side of the border. August gold rose $9.30, settled at $17.3650. That's actually lower now, posting a gain for the first time in 3 sessions. Gold futures have been trading at 1670 to 1770 range for about 2 months, despite a sharp fall of the U.S. dollar against major currencies at that time. Gold has been stuck in a roughly $120 range since early April. Michael Armbruster, managing partner at Altivest, told Market Watch. The fact that gold has been able to break out to the upside despite dollar weakness, zero interest rate policy, and promises of unlimited liquidity from central banks may be a warning sign for bullish gold investors, he said. If gold can't rally under these conditions, gold bugs should be prepared for the possibility of a shakeout to the downside. We remain bullish gold in the long run, but we sense short-term risk to the downside, Brewster said. And U.S. benchmark stock index has traded broadly higher, and the dollar strengthened in Tuesday dealings following an upbeat retail sales data that led to some weakness in gold prices earlier in the session. The ICE U.S. dollar index is at 0.32%, traded up by 0.3%. So you have tensions, geopolitical tensions against the strong dollar, strengthening dollar, which is the push and pull on gold and silver too. But nonetheless, there is this report on potential steroidal treatment for the illness derived from the novel strain of coronavirus also gave a boost to assets considered risky. So a lot of different factors that come into play here. To take a look at the numbers here, negligible increases for both gold and silver. But keep in mind with what the Fed is doing, we're in unprecedented times. $1 trillion here, $1 trillion there, $27 trillion total debt coming very soon, if not here already, by some measures. It's where does it end? The Fed is prepared to do all it can. Congress may act again on more stimulus that they're going to do from their side, plus quantitative easing to infinity. How much more can we go before the dollar starts to crack? My guess is they can do it for quite a while longer. Literally, I thought after quantitative easing 3 and what had happened with all of that stimulus going on and during the Obama administration, I thought for sure that there's something had to give then. No, we are squarely in the smack dab in the middle of modern monetary theory in action, folks. And although this consumer price index in this part of the economy is doing very well or is starting to come back here, that is independent and of what is the true nature of this system that we are a part of, folks, the hegemony of the U.S. dollar. And that is not immune to an unmitigated disaster in the future. As just how long that will go, we don't know. One thing is for certain, though, and this is the message I want to get out, especially after some pushback and a little bit of criticism on the video about the gold and silver. Is the party over for gold and silver? Well, if you watch that video and look at the context of it, the party is never over. In fact, we don't stack it to party. We stack it to protect ourselves against the party of the dollar. Really, that's what we're doing. Parties tend to be careless, they tend to be hapless, and that's exactly what the dollar is doing these days, where we hold gold and silver for when the dollar's party is over. And so, in that regard, we know that in the long run, gold and silver will do well, but in the medium term, they may languish for a while. And that's kind of what the point of that video is. But I am bullish on both gold and silver in the long term for sure, and even to some extent in the medium term. Maybe not so much the short term, because we're still in kind of an area kind of equivalent to early 2008 when we come to the grips of what's going on. And even though we have some positive numbers here, does not mean that we're out of a recession, and it also doesn't mean that we're not going to experience some downturn, some lengthening downturns in the economy, especially with some of these businesses that are gone forever. I just heard about Hertz Rent-A-Car is done with now. There's other things out there, other businesses, and all of the multiple casualties in small business restaurants that will never be coming back. And so you can have a V-shaped economy and growth in other sectors of the service industries and the like, but it's still going to take a while to get all those people hired back or find new jobs for those people. I want to be as optimistic as possible in that regard for that side of it. So I think we will see some recoveries there, but there's a bigger elephant in the room, and that is what the Fed is doing and the damage that's going to cause in the long run. This is why we hold gold. This is why we hold silver. And yes, even silver, I believe, will recapture its, not crown, but its place in the kingdom of precious metals as a gold's much younger brother. And it will act as a preserver of wealth if we ever get to a point where we're having to, rush to these safe haven assets. When they go to gold, they're going to also go to silver as well. But gold is the ultimate hedge against economic instability, and something we can count on for sure. And this is why we have the utmost confidence when we accumulate it and when we stack it. And but people's faith in silver has shaken in that regard, and it's understandable. But you have to be much more patient and really practice the art of dollar cost averaging, and throughout the course of time and stacking the precious metal before you can see a result. And by the way, I say result and not a gain, because it's not about gaining, and it should never be about gaining. It's not about making money. It's not about anything other than preserving wealth with both of these metals. So there you have it, a fascinating day in the news with gold and silver. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, please share, please comment, and I'm going to say please one more time for the old subscribe thingy. Yeah, might as well, if you haven't subscribed already, to do it. It won't hurt you, I promise. It takes an expendable amount of energy, probably just enough energy to have a small little bite of bread. That's right, it will cost you a small little nibble of bread to hit the subscribe button. So there is some cost associated with subscribing to this channel. It's that small little nibble of bread.